Good morning, everyone. Trust we are doing good. Welcome to another webinar series that we've got for you all. Emotional control, secrets to successful trading. Okay, I'm your host Akinwale Chibike, and yes, we're here to share knowledge again today, and to get acquainted with the new guys on the call. So, if you can hear me properly, please drop a message in the chat box. Okay, if you can hear me properly, loud and clear, just drop a yes in the chat box, and the rules still stay the same. To converse, use the chat box. If you've got a question, please drop the question in the question section. I send out polls from time to time. Do well to respond to the polls. Okay, that's the rule on the webinars, and it's quite amazing seeing everybody on here in new energy, new liquidity in the markets. I hope we are trading the right way and we are making profits also. Okay, so before we hop into today's session, at Eagle Global Markets, we offer you access to financial freedom. Okay, to the financial market, so you can be financially free. That's what we give you at Eagle Global Markets, and this is by far the best thing that would happen to you, okay, or that has happened to you, gaining access to the financial markets and seeing that there is a well of wealth where you can take from. Okay, it's $6.6 trillion market, and it's amazing knowing that there are no rules, no restrictions at all. You can just go there to make money from it. So at Tico Global Markets, we offer you products, okay? Products that give you access to the financial markets where you can trade and be financially free. And one of those products is the MT4, okay? MT4 is a dollar trading platform where you can trade the financial markets in dollars, okay? You can trade the financial markets in dollars. That is what the MT4 platforms gives you access for. Okay, you trade financial markets in dollars, where you can trade forex, commodities, indices, and stocks, and also cryptocurrencies on the MT4 platform. Okay, now on the dollar platform, um, you can actually trade the financial markets. Sorry, on the other platform, which is the Naira platform, you can trade the financial markets in Naira. Okay, you can trade the financial markets in Naira. We give you access to trading the global financial markets in Naira, where you get access to trade forex, indices, stocks, metals, commodities, and all. Okay, we give you access to trade the global financial markets in Naira and on a very amazing platform, the Cloud Trade platform, which is like state of the art. Okay, it's a state of the art platforms that you have. You can analyze the financial markets on there and place your trades in Naira. And the last platform we offer is the copy trading platform. Okay, the copy trading platform, where if you are too busy to learn about the financial markets, if you work 9 to 5 or you have a job that won't give you much time to check the financial markets, you can, okay, you can copy trades of consistently profitable traders using the copy trade platform, and it is fully automated. Once you make your deposit, which is a minimum of $101, you can actually start copying traders on our copy trading platform and make profits consistently. Okay, consistently, and you can make profits as much as 100% to 500% of your trading account or your copy trading account. It's very easy and simple to do. So I believe everyone can see my screen. If you can see my screen, please let me know, which is the slide actually. Um, Emotional control, secrets to successful trading. Now, before we begin, actually, um, I want to tell you a little story. Okay, a story about the financial markets and about how riches and wealth is made. Okay, now in the financial markets, do you know what we basically do in the financial market is making our money work for us? Okay, for you to make profits from the financial markets, you need to put in money into the financial markets, and that is one thing rich people do. Okay, they don't work for money, they make money work for them. And that is what you are doing when you trade. You're making your money work for you by putting in money, analyzing the charts, placing the trade, and the money comes. Okay. And another thing mistake we make is we let our emotions get the best of us. That's what we want to talk about today. Controlling your emotions to get the secrets to successful trading. Okay, that's like the secret to successful trading. Once you can control your emotions, once you can control your emotions, you get successful when trading. Okay, you know that that is just the key success to trading. And like I said, you make your money work for you in financial markets. That's what rich people do. That's what you should be doing. Making your money work for you in the financial markets. Okay, so before we proceed, can anyone remind me the what we discussed in our last webinar? Anyone at all? Can anyone remind me what we discussed in our last webinar? Anyone at all? What we discussed in the last webinar? Can you all hear me? Are you following? Can anyone at all remind me what we discussed in the last webinar? Okay, we've got a few people typing. Okay, I'm waiting for response actually. And also, I just dropped the poll. Please let's respond to it. Okay, forex trading sessions. Okay, yeah, trading the forex market. How to trade the forex market session. Okay, yes, that's what we discussed. And yeah, yeah, correct, correct. And good morning, Limat. Good morning, everyone. And yes, so what did you learn from the last webinar? Let's start from there. What did you learn from the last webinar so far? What did you learn from the last webinar? Can anyone share what they learned from the last webinar? Morning, Jude. Hope you're doing good. Morning, Israel. Morning. I think Philip is trying to share what he learned from the last webinar. Same as Latifa. Okay. We're waiting for their response actually. And to the rest of us, how is it going for us? How's trading been? Share your experience in the chat box. Brilliant. You learned when to enter trades using trading sessions. Brilliant, brilliant, brilliant. That's amazing. Like I said, a few financial instruments we move during a certain period of time every single trading day. We talked about them in detail, talked about them in detail. Okay, and that's just it. It's just what it is. Knowing which of these pairs we move during a certain period of time and looking for trades or framing trade ideas during that period of time. That is just the key. That is the key to it. That is the key, and that's what we discussed last week. Okay, so everyone can hear me loud and clear, Jude. I think you should adjust your headphones or your mic, or sorry, your headphones. Yeah, your headphones. I learned the right time to enter a trade using trading session and the kind of best to trade. Brilliant, brilliant. That is, like I said, it is what it is. Once you know these little things, they really matter when you trade the financial markets. There's so much matter. You know the right time to enter a trade, you know the right time to exit the trade, you know the right time to approach price. It's price and it's time and price, not price and time. Okay, it's time. When the time comes, price will go to that area it wants to go to. Okay, so it's time and price. Very, very key. Very, very, very key. Now to today's topic. But before we go to today's topic, has anyone got, for the new guys on the call, actually, the new guys on the call, have you got any question you want to ask me about the financial markets? Please let's ask them now. And please ask in the question section, okay? Please do ask in the question section. Do ask in the question section, okay? If you got any question at all you want to ask me about the financial markets, please ask in the question section. We'll spare 5 minutes for that. In the question section, please ask. And let's respond to the polls, okay? Let's respond to the polls. Let's respond to the polls. Okay, I'm sending another poll out right now. Let's respond to it. Okay. Next time, Israel, you put the question in the question section, okay? But for now, um, old webinars are on our YouTube channel, okay? Old webinars are on our YouTube channel. I'll drop the link to our YouTube channel right now. Okay, I'll drop the link to our YouTube channel right now in the chat box, so you can find a link to our YouTube channel in the chat box. Okay, so I'm dropping the link right now. Great. So you can find our previous webinars in that using that link. Actually, you can find all our previous webinars using that link. Great. So any other question? Any other question? Let's ask within the 5 minutes time frame I gave for questions. If you've got any question at all, please ask before we go into today's class. Well, there will be another question session after the class. Okay, there'll be another question session after the class. For now, if you've got any question at all, any about the financial markets, please ask your question. Okay, still waiting on questions. And okay, in the absence of no question, let's hop into today's. Okay, we've got one question. Yes. I determine if price will be a buy day or a sell day when I scalp. Okay, so when I scalp in the financial markets, when I scalp, I want to know where price is going to for that day. Okay, for that day. So I make the decision off the previous day and off direction of price. If the direction of price is bearish, my decision would be on the previous day, looking at what the previous day did, then I'll use it to frame my setup on the 15 minutes time frame. I use it to frame my scalp setup on the 15 minutes time frame. So that's what I do. And like I said, it happens or it occurs every day, every time in price. Okay, every day, every time it occurs, every day, every time, every day, every time in price. Um, in rare cases actually, because sometimes now the only time these things happen is when you are trading during a unstable market condition. Possibly there is FOMC, there is one of those major news. That's when you can lose more than your stop loss, because sometimes price might gap, and when it gaps, it doesn't hit your stop loss. It just takes you out totally. Okay, so that's why most times I advise not to trade during major news, like those type of news, possibly those election during election period or the FOMCs, NFPs. Well, I trade them due to my level of expertise, but I advise people that are starting out, that's newbies, not to trade them because it might really not resonate around them and they end up losing money trading those high impact news. Okay, so that is it on that. Now let's hop into today's session. We said emotional control, the secret to successful trading. Okay, emotional control is the secret to successful trading. In your own word, okay, in your own word, what is emotional control to you? What is emotional control? Anybody at all? In just your own word, what do you think emotional control is? Relating to the financial markets, okay? What do you think emotional control is? What do you think emotional control is relating to the financial markets? Okay, we've got a few people typing. Um, let's wait and see the response we get. So, to you, in your own word, what do you think emotional control is relating to the financial markets? Okay, I'll take that. Okay, being able to determine how to feel when you are losing money. I'll take that. Anybody else? Anybody else? We actually have quite a good number on the webinar. I expect a lot of response. Okay, I expect a lot of response. Don't be shy. I'm not going to say you're wrong. Nobody's wrong on my webinars. Everybody. That's why I said to give our perspective, not a definition, just your perspective on what it means. Okay. Anybody else? Yeah, we don't need to be shy at all. We don't need to be shy at all. We learn every single time. That's why you just give your perspective on the topic so we can all learn from one another. And the logic is we will say something that resonates around the topic. Okay, keeping your emotions in check when trading, that's wonderful. Like, your emotions in check is key. It's very, very key. I'll tell us all a story of how I used to lose money then after the call. Okay, putting your feelings in check whether you are in a loss or profit. I like the fact that you added profit to it. Okay, I like the fact that you added profit to it, Debbie. That's amazing. Putting your feelings or emotions in check. How do you feel when you are losing money or when you are making money? Okay, Joseph says ability to control oneself on both good and bad days of trading. That's wonderful. That's wonderful. That's very, very amazing. Like, very, very. Now, I like the fact that we were able to give our perspective and idea on what emotional control is in the financial markets. So let's head on to, in this session, what we'll be learning. Okay, in this session, we will learn what is emotional control when trading the financial markets. Okay, three common emotions trader exhibits when trading the financial markets, which are fear, fear or nervousness, conviction or excitement, greed or overconfidence. Okay, now controlling your emotions to being a successful trader, which are creating personal rules, trading the right market condition, trading with funds you are willing to lose. I'll talk about that very well. Establish a trading plan and a trading journal. Relax. I like the fact that the last thing on that list is relax. Okay, so today I made it a bit bulky, so we'll go through it. What is emotional control when trading the financial markets? Now, before I begin, I believe we all have our pen and paper that we are using to go that we're going to use to jot notes. Okay, it's very, very key. Jotting notes, very, very key. Jotting notes when I talk. I also have my own notes here. I jot what I say because most times I say things and I end up not remembering again. So the notes actually serves as a reminder. Okay, I said this and this is how I will apply it when I'm trading. This is what I will do when I'm trading. Okay. Now, what is emotional control when trading the financial markets? Controlling your emotions when trading forex can identify the difference between your success and failure as a trader. See, Controlling your emotion when trading can help you identify the difference between your success and the failure as a trader. Your mind has its own state. Okay, your mind has its own state. Your mind has its own state. Your mind state has a significant impact on the decision you make. See, your state of mind when trading will impact your trading decisions greatly, not little, not big, but greatly. Your state of mind will impact every single decision you make in the financial markets greatly. See, particularly if you are new to trading, when you are new to trading, your emotions will play a lot of tricks against you or with you, because it's going to affect how you think. It's going to affect decisions you make in the market. It's going to affect literally every single thing you're doing in the markets. See, keeping a calm demeanor is important for consistent trading. When you want to trade, be calm. Don't rush. Don't feel the opportunity has left you. It hasn't. That's the financial markets. Opportunities comes and goes. Okay, opportunities come and go. Your opportunity, that single trade that will make your account, will come even if you've missed it before. Price is repetitive. It happens every day, every week, every month, every time in price, be it on a higher time frame or on a lower time frame. Your psychology is a key factor that puts you up to becoming a constantly profitable trader. Now, let's bring all this down to a layman term. Let's explain and get familiar with one another. You see, in forex or when you trade the financial markets, how you feel when you trade determines how much you make when you trade. Will you agree with me? Also, vice versa. If you feel happy, you can lose money. If you feel happy, you can make money. If you feel sad, you can lose money. If you feel sad, you can make money. The way you feel determines your success or your failure in the financial markets. Your state of mind plays a huge significance on the decisions you make when trading. If you are new to trading, if you are new to trading, try to keep calm always, because it's very, very important for you to consistently trade and be profitable. Okay? Do we all get? Now, let me explain something to you. If you are feeling sad, it's human. It's just common sense. Okay, it's human logic. If you're feeling sad, do you feel like doing anything at all? When you're sad, do you always feel like doing activities, like any type of activity when you're sad? Do you feel like partaking in anything at all when you're sad? Yes or no? The answer is no. You just want to be left alone. You don't want anybody to stress you. You don't want anybody to call you. You don't want anybody to text you. You just want to be left alone. Now, imagine you go to the financial market with that attitude. Do you think you'll be calm and wait for price to reach your area of interest or your point of interest before you take a trade? No, because you won't even believe in the analysis. Even if you do it, like you force yourself to do it, you won't do it well. That's the logic. If you are happy also, you still don't want to partake in all activities. There are selected activities you want to partake in. And this is why I said your emotions when you want to trade coming into the financial markets is key. It's like the premise of being successful or not successful in the financial markets. Do we all understand what we just talked about when it comes to emotional control when trading the financial market? Take charge. You need to be in charge. Okay, you need to be in charge of how you feel. You need to be in charge of how you approach the market, your feelings in the market. So, do we all understand? Yes or no? Do we all understand? Yes or no? I like to get a lot of response actually. Do we all understand? Yes or no? Brilliant. Okay, I'm waiting for more response actually. If we do understand, just type in a yes. If you don't understand, just put in a no. I'm here for you. I would explain over and over and over and over and over till you understand. Okay. Someone said he doesn't understand. Okay. So what we're actually talking about is how to control your emotion when you trade the financial markets. Okay. I said, and based off statistic, how you feel can help project whether you will be successful or profitable in the financial market on any trade you place. Your mind, okay, Shegun, your mind has its own the way it resonates around things. It impacts every single decision you make. If you are thinking about something and your mindset is not good, there's a 90% tendency that you won't get involved in that thing. Okay, if your mindset is good, there's a 90% tendency that you will get involved in that thing. And if you are new to trading, always be calm because it is very, very important for you to survive in the financial markets. Okay. So what we are basically talking about is your emotions, keeping it in check every single time you want to trade or every single time you're trading the financial markets. So do you understand now, Shegun? Do you understand what I mean now from everything I just said? Okay, great. Now, we are actually the numbers are increasing on the webinar, so please let's respond to those polls. Okay, I told you guys you can't pay me. The only way you can pay me back for my time is when you respond to the polls. It helps me understand how to better myself and how to do these things better on the webinar. Okay, so please let's respond to the polls. Now, to the next slide. Okay, 3 common emotions you as a trader you exhibit when trading. Now, I was able to like put myself in the center of this when I was creating this. Okay, I put myself in the center to understand how I once was and how I am now. So, the 3 common mistakes or emotions traders exhibit when trading is number one, fear or nervousness. Now, I recommended books to us sometime in February and March, I guess, or April. I can't really remember. I recommended Trading in the Zone by Michael J. D. Douglas. Okay, Mark J. Douglas. Sorry, I said Michael. Mark J. Douglas. Now, Mark J. Douglas is a very good trader when it comes to the psychology aspect of trading. Like he has a lot of content on that, and it's free on YouTube. You can dig into that. Now, in his popular book, Trading in the Zone, which is known as the Trading Bible for trading psychology and emotions, Mark discussed something which is fear. Okay, he said we have 4 common types of fear, which is fear of missing out, fear of loss, fear of being wrong, and fear of letting a winning trade turn into a loss. Now, all of these fears, even if you don't have FOMO, fear of missing out, you have one, possibly fear of loss. Everybody has fear of loss. Everybody has fear of being wrong. Everybody has fear of letting a winning trade turn into a loss. That's why we close our profits early than our losses. See, the reason for being fearful in any of this way at all is because of, as a trader, you know you are doing the wrong thing. And you've been hurt by it in past. So now you are just super alert and cautious. You don't want to get hurt anymore. But when you are super alert and cautious of not getting hurt anymore, you get hurt the more. Am I making sense? You are super alert. You are cautious. You don't want to get hurt anymore. That's when you get hurt the more in the financial market because you will be reacting. You'll be overreacting in the markets. Okay, you overreact to every single thing the market throws at you. Remember, you need to be calm. Fine, the financial markets, you need to be reactive, not predictive. But you will start being overreactive and start predicting instead of being just reactive. Now, I'll break it down to you. Fear of missing out. Let's take, for instance, now you mark out CAD JPY, a sell on CAD JPY. Okay, you mark out a sell on CAD JPY, and When you mark out a sell on CAD JPY has not traded to your POI, but that's your point of interest, and you saw a bearish candle forming. Immediately, you enter the bearish candle because of you feel it's about to move. You don't want to miss out on that move, and all of a sudden, it just continues going back up, takes you out your stop loss, and goes to your POI. Now start falling down massively. You start blaming. You don't blame yourself. You start blaming the market. That's what we traders do. We blame the market a lot, whereas you are supposed to blame yourself because of your emotions were not in check. You were nervous of missing out. You were fearful that the trade would go without you. Fear of a loss or fear of loss. And fear of being wrong. Let's take those. Okay, let's take fear of loss, fear of being wrong, and fear of letting a winning trade turn into a loss. Let's take it all together. Now, fear of loss is you don't want to lose on any trade. But even the best of traders lose money. And you don't want to lose money. You don't want to take risks. How do you get financially wealthy from the financial markets? You must not be scared of losing. That's the thing. You don't need to be scared of losing. Losing is part of the game. It's part of how you make money from trading the financial markets. And to me, my perspective about the financial market is you don't lose. There's no losses in the financial market. It's only lessons. You don't lose. It's only lessons. Because when you lose money, you've learned a lesson on how not to do it. Okay? You've learned how not to do it. Am I making sense? Like you've learned how not to do it. You did it a way and you lost money. You didn't lose money. You just got a lesson of don't do it this way anymore. Do it this way. The fear of being wrong. You want to be right on all of your analysis. Now it's fine. But the logic is you don't want to be right on all your analysis. You don't want to be wrong on all your analysis. You just want to make profits. Let that sink in. You want to make profit. You don't want to be right or on the analysis. You don't want to be wrong. You just want to make profits. Once you've been able to separate the fear of being wrong and the fear of being right out, the only thing you will be focused on, your focus will be narrowed down to profits, and that is the right thing. Now, the fear of letting a winning trade turn into a loss. You had a trade previously. The trade went 200 pips. You didn't close it, and in the end, it reversed and took you out in a loss. That was just greed. Okay, that was greed. I'll come to greed also. But you now take another trade again. It has quickly moved 5 pips. You quickly close, and you were anticipating 300 pips move. Then in the end, it moved 300 pips. You lost because you left money on the table. It's just like a casino. You left money on the table. You left money on the table because you were scared of letting that 5 pip turn into a loss because of what happened previously. Once you have a stated amount of profit you'll be making on a single trade, let it pan out. That is why we have trailing stop, locking your profits. And like I said, the reason you react this way as a trader in the financial market is because of you are doing the wrong thing. You are not supposed to enter when you entered. You are supposed to lose on that trade, but you don't want to lose on that trade. You know that this analysis is wrong, but you don't want to admit that you're wrong on the analysis. You know that this trade is supposed to run for 200 pips, but you want it just for 5 pips. So you don't let the market take the 5 pips away from you. Imagine the market taking 5 pips away from you. That's devastating. But imagine the market wants to take 5 pips to give you 200 pips. That's amazing. The next one is conviction/excitement. You see, conviction and excitement are like the king of emotions that you will want to feed off. You feel these things every time you enter a trade. Every time you place a trade, you will feel it. And the question is, how does it affect you as a trader? Now, let's break it down. Think about how you feel when you have a winning streak of trades or a single large winner. How do you feel? Write how you feel in the chat box. Tell me how you feel when you have 5 winning trades or you have 1 trade that push your account higher. How do you feel? How do you feel? Drop your feelings in the chat box. How do you feel? when you have five winning trades or a single trade that is like the profit is massive. Everybody says they feel awesome. You know how I feel? I feel on top of the world. Like I feel I'm on the highest skyscraper at Ikoyi. Yes, I feel like a boss. Yes, like there's this logic, there's this band all around where people say do am if it's easy. Like that's what I feel. I feel like you to do it if it's easy now. It's not easy. Fine, yes, it's of human nature to feel that way. Okay, it's of human nature to feel that way. It's of human nature. I'll dance around, I'll order things, even though I've not withdrawn the money, I'll order things and all. I'll tell my friends we are going out for the weekend. I feel big actually at that moment. Yes, it builds excessive positive sentiment and confidence in our mind, right? But realize that with that mental state, we now feel like we're on top of the world. We own the market now. We start taking too many trades, right? We have a plan. We leave the plan because we are a king. We control the markets now. Like you slap the market around on five trades, you feel big. Then you start feeling you can slap the market around. Well, this time you get slapped around by the markets, which in the end ended badly. It's good to feel excited, but don't let it get to you as a trader. Okay? Don't let it get to you as a trader because once it gets to you, you end up losing every single penny you made from those trades on just one single trade. You can slap the market around. Yes, you can slap the market around multiple times. You can slap the market around, let it play around how you want it to. But remember, you can't do it every time. You can only do it at stipulated time based on your trading rule. That's what I want you to know. So don't let fear or nervousness get to you as a trader. Don't let it get to you at all. Okay? Conviction and excitement. Don't let it feel excited, fine. But feel excited after you've closed that trade, after you know that okay, I've met my 6% for this month, I've met my 10% for this month, I've met my 1,000 pips for this month. Feel excited then and just close your trading account. Don't plan on trading again. But when you are coming back to the market, don't bring that same emotion. Come neutral. Come neutral. Because you've come neutral, you are expecting the market to give you whatever it wants to give you, or you're expected to take from the market whatever you want to take. The last one on the common emotions trader exhibits when trading is greed and overconfidence. We are all a fan of greed, okay, and overconfidence in the market. Remember, it's $6.6 trillion now. Nobody's telling you this is how much you should earn. You can earn as much as you want. You can even earn the $6.6 trillion. You can earn the $6.6 trillion if you want. But let's dive right into it. The general definition for greed is basically excessive desire more of something more than you need it. Okay? Excessive desire for more of something than is needed. You want more than what you actually need. That's greed. And in trading, expecting a higher return is the worst mistake you can ever do in your trading career. It is the worst mistake you can ever do or ever make in your trading career. Greed will prompt you to take trades continuously without realizing that the market will be open again tomorrow. So, as a result of this, your trading behavior, traders often fall into over leveraging and over trading. Now, what happens with greed? Or how does greed comes in play in the financial markets? I'll use this scenario we used in one of our webinars then. I'll say the scenario again. If I told you on the Telegram group that GBP USD will fall 100 points, and I told you I will only be willing to take 20 points, what will you do? I want your response in the chat box. What will you do? What will you do? I told you GBP USD or the Dow or anything will fall 100 points, and I said I will only be willing to take 20 points, what will you do? Just once you know that information, what will you do? Someone said, I'll take what you take. Well, sell and take at 40. Okay. I'm seeing those that are greedy already in the financial market. Someone said, I'll take all. Follow after my position and take what I take. Well, it's funny reading the comments. It's funny reading the comments. We are all giving our perspective. So don't feel bad if I'm laughing or anything at all. It's just like the comments and all. Someone said they'll follow in my footstep. Oh. Well, okay, let's break this down. Let's break this down. Now, the person that gives the signal or the call that is going to take 20 points out of 100. You should understand something. He has a trading plan. He has a trading rule. He has a reason for wanting 20 out of 100. That's like 10 or 20% out of 100%. That's what he wants. You don't know the reason why he wants to take 20%. You don't know the reason why he wants to fall 100%. Why should you take the same thing he wants to take? You should be aiming to take lower. And this is where greed and overconfidence comes in. Because of you've seen the person's previous results, it always gets to the peak. If he says price will reverse at 93, it's going to reverse at 93. If he says price is going to reverse at 1.222, just expect price to do it. Because he has said the same thing the same day. You feel very confident, overconfident in what he said, and you do the same thing. You end up losing money. Your emotions come into play. Your emotions just he has been doing it before now. He's a king, he's a guru, he's a this, he's a that. I will do the same thing. And in the end, you lose money. You over leverage because of he said he's going to do this today. You trade with 0.01 before. You decided to enter with one standard lot. You trade with 50 naira per amount on cloud trade. You decided to do 1,000 that day because he said. Because he said. Do we understand? You don't need to let greed and overconfidence reign over you in the financial markets. You don't need it at all. I gave a logic on a Saturday class that I held a few weeks back. I gave a simple approach to trading the financial market, how to make 30 pips every or 30 points every single day. That in a week, you make 6% of your trading account. Only one person has been following the rule on the Telegram channel. And even though he's following the rule, he's not following the rule as I explained it, but he's following the rule and making 20 to 30 points every single day. In no time, if he adjusts, readjusts, and makes that approach aligned to himself, sooner or later, he's going to be doing more than 6% every single week. Now, he is not putting in greed. Remember, I said it was an old Saturday class. Okay? It was an old Saturday class. Okay. Remember, I said every single day, price must move from the range of 45 to 60 points. He doesn't want the 60 points. He just wants 30. He just wants 30. 30 or less every single day. 30 or less. See, once you can do this thing consistently, if you can take 5 points from the market every day consistently, you are profitable. You are set up for life. Like you're set up financially for life. Having your own trading plan is necessary. I can't overemphasize that. Like I can't stress on its importance. It's very, very important. I've stressed about it multiple times. Multiple times. See, the logic is we'll create a trading plan. We'll use it for a few days. We'll stop using it because we don't feel like using it. You don't want to journal your trades. You don't want to be in alignment with your trades. Well, you realize the reason soon. Okay? So the last thing on the slide, which is how to control your emotions and trade successfully. How to control your emotions and trade successfully. Before we talk about this, do we all understand every single thing we've talked about, from um, controlling your emotions in the financial markets to those emotions you exhibit when you are trading? Do we all understand what we talked about? Those two contents we've hammered on, yes or no? I'd like to get a response so I know if to proceed or explain, go back to explain again to those that don't understand. And I like to get a lot of response. And also, let's respond to the polls. Okay, let's do well to respond to the polls. That's the only way you can pay me back for my time. Okay, and how to do my job better. Okay. Okay. Any? Okay, brilliant. Yes, yes, a lot of yes. Okay, great. Now let's go to how to control your emotions and trade successfully. You see, even if we talk about these 5 points, it is not enough for you to control your emotions. You still need to put in the work. You still need to put in the work. What is the work? We'll talk about it after. That's like an add-on, a spice on today's class. Okay? The first thing is create personal rules. See, I can't, I'll say it again, I can't stress the importance as much as the importance itself. You need to create personal rules when trading. Setting your own rules to follow when you trade can help you control your emotions 100%. Your rules might include setting your risk to reward tolerance level for entering and exiting a trade, true profit targets, and or stop losses. What that simply means is once you have a set of rules you follow when trading, which includes your risk to reward ratio when you want to enter a trade and when you want to exit the trade, your stop loss, profit target, and all. It will help you. It will help you control your emotions because you know this is what you want to do. Even if your mind says it will still go 10,000 people, just tell your mind, get behind me, Satan, or get behind me, devil, because it's just the devil speaking to you to do or to go against your rules. Okay, like that is the key thing. You see, there's this voice in our head. I'll tell you, there's this voice in our head always when we trade, which is it will still go up small. The profit will still come. Just stay inside the trade. Stay inside the trade. If you are in profit, that's the voice. And even if you are in a loss, there's this voice that says it will soon reverse. Don't worry, just hold. It will till you lose all your capital. It's just common sense. It's just common sense. Like that voice will surely say, "Hold the trade. It will soon reverse." Now imagine. There is a voice that is telling you to hold your trade when you are in a loss. Okay, that it will soon reverse. But there is that voice also that is telling you close it when you're in profit, close it. It will soon go against you. Which of the voice should you listen to? You should listen to none because you already have a set of rule you are following. Someone said the voice is called the monkey voice. The voice is just a trap to lose your capital. You see, trading is easy. Trading is a business. It is the most easiest way to grow your wealth. It is the most easiest way to make wealth. Are you willing to do it the right way? Like we are giving you the key on every single webinar to make profits consistently. If you are new on this webinar, or if this is your first time of hearing of the financial markets, see, you should be glad that you joined this call because this is like one of the things you need to know before you even start trading because it will help you better yourself when trading. Yes, you need to bind it a lot. You need to bind that voice a lot. Okay. So to the second thing, you need to trade the right market conditions. This is also another thing I keep on saying. See, you can't trade all market conditions. You can never trade all market conditions. You need to stay away from market conditions that aren't ideal. Okay, it's not prudent. Okay, stay away from market conditions which aren't ideal and is also not prudent. See, not trading when you aren't feeling it is a good idea. If you're not feeling the market, don't trade. Don't force it. Don't say you see this. You are not seeing it. It's just Okay, when you are not seeing it, if you don't see it on the chart, if you don't see it, don't trade it. Like if you are not feeling it, and you still don't see it, but you are forcing yourself to see it, don't trade it at all. I'll talk about that. I'll answer your question. Just drop your questions in the question section. If you are not feeling the market, like you don't feel the energy, you don't feel the vibe. Yes, very easy to say if you don't have a rule. It's very easy to say if you don't have a rule. It's very easy for me to say all these things to you guys. The major way you can implement it is have a rule and stick by it. Discipline is key. I think I have a recorded voice note on discipline. I told myself some like 2 years back, I should send it to the Telegram group. Everybody should listen to it. Like being disciplined in the financial market is key. Another key. There are a lot of keys to the financial market, and we'll keep on sharing the keys every single time on the webinar. Being disciplined, very, very key. If you want to be a bull, tell yourself, I will only trade bullish market conditions. If you want to be a bear, tell yourself, I will only trade bearish market conditions. Bullish means price is going up. You want to be buying alone. Bearish means price going down. You want to be selling alone. You want to trade a ranging market condition, fine, but a choppy market condition, stay out of it. Okay? You need to trade the right market condition. The right market condition. There are market conditions you should be trading. When there is news, you want to trade during the news. Why? Because somebody said you can make the most money from it. Yes, you can make the most money from it, but are you skilled enough to trade that market condition? There are questions you need to ask yourself before you place a trade. There are checklists you need to have before you place a trade. To the next one, trade with funds you are willing to lose. Okay? Now, there's always a disclaimer. The financial market can be very, very volatile. You can lose some or all of your capital. There is no lies on that. Okay, no lie at all. We're not lying, it's true. The financial market is very volatile, very, very risky. You can lose some or all of your capital. That is why I always advise to trade with funds you are willing to lose. Okay, trading the financial market carries a huge amount of risk, and capital can be lost in the process of trading. That is why it is advisable to trade with the funds you are willing to lose and you are comfortable to lose. See, the only thing I'll tell you is if you lose money, it's a lesson learned. If you treat trading as a business, okay, in a business, anything can happen for you to lose money. You can mistakenly give or do a transfer of 1 million naira instead of 100,000 naira. Mistakes happen, okay, that end up making us lose money in any business we do. Just bring the same logic to the financial markets. Remember, you start a business with money for a business. Have the same thing too for Forex. Start Forex trading. Start trading the financial market with money that is meant to trade the financial markets. So that when you lose, you know, okay, you lost this money. You've learned a lesson from losing the money, and you won't do the same thing again by losing money the same way you lost money. The fourth one is establish a trading plan and trading journal. There was one webinar, Kelechi and Chooks talked about the importance of a trading plan and a trading journal. It is very, 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 very important. See, in terms of fundamental factors, planning for various outcomes in the run up to news events or any strategy you have in mind, this trading plan and trading journal is key. The results between new traders using a trading plan and those who don't can be very substantial. Like you will see it clearly. If you are a new trader and you have a trading plan, and if you are a new trader and you don't have a trading plan, there is a difference between the two of you. One has the how would I put it? One has an approach towards being profitable. One doesn't have one. Compiling a trading plan is the first step to greatness in the financial market. It is the first step to attacking your emotions when trading. You have a trading plan. I only want to trade USD based pair, rather than someone who is trading all the pairs. You can't be profitable on all the pairs. If you are trading, you're jack of all trades, master of none. You don't master some. I can't call you in the night and say, okay, how many pips do you think this thing will move tomorrow? You don't know it. You are just trading it based on as the spirit leads. But in someone who is trading USD based pairs, he can tell you this is what will happen to USD, this is what will happen to all this financial market. That is like professionalism and profitability. Well, you're just doing as the spirit leads on the chart. There's a difference there. Okay? But I'll be candid with you. Another truth is, unfortunately, trading plan will not help you completely escape what your emotions will throw at you. Okay, but keeping a journal and having a trading plan will be very, very, very helpful. You say if we have 100%, a bucket of emotions, 100%. Those that don't have a trading plan, those that don't have a trading journal, they are the ones that have the 100%. While you that have a trading plan and you have a trading journal, you've got like only 30% of emotions to deal with. That's a huge difference. Last but not the least, relax. Take a chill pill. Stay G. Okay? You need to just relax. If you are relaxed, you will enjoy trading the financial markets because you'll be better equipped to respond rationally in all market conditions. Now, when I mean all market conditions, in just those market conditions you're trading, okay, you'll be able to respond to it. Like the market says A, you tell the market B by carrying out executions that are better in the market. Stay relaxed. Stay. You see the way I analyze a chart, I don't rush it. I calmly do it because that is the logic. So calm down and do it. Okay, like I called GBP USD sell yesterday. I did not quickly sell. I waited for it to go to the POI. You guys saw it this morning when I sent an updated chart. It went to the POI and I got my entry at the POI. That is how you stay relaxed. I said US 2000 sell yesterday. It sold, but it didn't sell as much as I expected. It almost went to my stop loss. This morning it has retraced, went my direction, hits my take profit. These are the things you need to feel relaxed on. Don't rush. Don't rush to get an entry trigger. It will come to you. Okay, it will come to you. Don't rush to get, and just stay relaxed, stay jiggy, stay chilled. Yes, I'm here. I'm here. Ask your question, drop your question in the question section. Okay, relax, and all these things you will be able to control them and not them controlling you. On Telegram, go and check regular guy. Okay, regular guy, go and check regular guy. I called those trades on Telegram. Yes, regular guy. Check. I am the one that called those trades. Yes, yes. The trades regular guy sent him yesterday. It was me. Okay, that was me. Or that was me. Yeah. Okay. So we've come to the end of today's webinar. Like every detail we're talking about in today's webinar. But don't leave the meeting. Okay. We've still got a Q&A session. Okay. Now, from everything we discussed today, what have you learned so far? If you've got a question, please drop your question in the question section. Let's converse. Let's see what we've learned. Let's understand ourselves. So the chat floor is open to everybody. What have you learned so far in today's webinar? Okay. What have you learned so far in today's webinar? Will you be applying it? Do you see these things working for you? So I'll be publishing 4 polls right now. Please let's all respond to every single one of them. Okay. Every single one of them. Let's respond to it. I'll go to the chat box and the question section right now. Let's just respond to. Let's do what to respond to the polls. Okay, they're going through the chat box. You see, the logic is okay. Let me answer Philip's question. Okay, Yes, there's a Telegram chat. Let me drop the link in the chat box. I'll answer every question one by one. Okay, let's stay chilled. I'll answer every question one by one. Okay, yeah, that's the link to the Telegram channel. Now, someone asked, how can we really predict this market well? You see, um, you can really predict the market well. Okay, but do you want to predict the market or you want to be profitable when you trade? Stop looking for an holy grail. There's no holy grail, but you can become the holy grail by having a trading approach that works for you. Okay, that's the best answer to your question, Philip. There's no holy grail. You can become the holy grail, but there's no holy grail. You can make a system your own holy grail, but every trading system has its flaws. Okay, you can be able to study a trading system, reduce the flaws, and make it work 90 to 80% for you. It's not compulsory you learn SMC. You can trade just pure price action. You can trade indicators and be very profitable. Okay, so that's it on your question, Philip. Losses are inevitable in the market. That's one thing I want you to understand. Losses are inevitable. So, Tolu says, what type of market condition is unideal? I should be asking you that. What type of market condition is unideal for you? Like for me, I can trade a trending market and a ranging market, but a choppy market, I can't. I can't trade a choppy market. So a choppy market is unideal for me. But the question is, what type of market condition is unideal for you to trade in? Okay, so I just said, what number can a chart reach for us to know that this is a psychological level? Zero levels are psychological levels on the chart. Once you see 1000, like zero ending the number on the chart is a psychological level. They call them institutional levels. Okay, that's a psychological level on the charts. So, any other question at all? Please ask your question. Questions that are in alignment to the topic or questions that are not in alignment to the topic. Just ask. Okay, and possibly we might do a technical analysis today on any financial instrument. Okay. Yes. Brilliant stuff, Abdulrahman. Brilliant stuff. Before we go and go through the charts to start analyzing, I'd like to call on anybody to share anything with the house or experience. I already sent an invite to Chicks too. I already sent an invite to Chicks. So Chicks, please accept the invite. Okay, so these books you can get them online or you can buy them hard copy on Amazon. Okay, there's a lot of books. I'll drop the names on Telegram for everybody, whoever wants to buy, possibly from Amazon or download the copy online. Okay. Good morning, Chicks. How are you doing? Hello. Good morning.
Hello.
I mean, good afternoon. Chicks. How are you doing?
Afternoon. I'm fine. I'm fine. How are you?
I'm doing quite well. Yeah.
Yeah.
So, have you
Just
got anything to share with us?
with regards to emotions, because I see that's what today's lesson or today's lecture is about.
Yes. Emotions. Yeah.
When it comes to emotions, as they mainly say, just when you put money into trading, it's money that you're prepared to lose. As such, you're not. They say if you lose it, you won't get upset because in your mind you've already focused to lose the money, but technically you don't want to be losing the money because you have learned a lot as you have progressed when you've placed the trade. Yeah, one thing I would say,
Exactly. That is very
yeah,
key. Very key.
your risk management. As soon as you've placed a trade, you've got your stop loss, you've got your take profit, you've done all the analysis for that trade to basically pan out. So you've increased your probability of winning. So like I did a trade this morning on from Friday, I believe. Yeah, on Euro to JPY, and I left it. I think overnight it had basically gone up and then started coming back down. But if you watch it and it starts going up, that fear of, oh, it's going to start eating into my stop loss. You're like 20
Exactly.
pips stop, and then you cut. No, because you should have just, your analysis of the direction. Have you got your settings? Have you got your, not indicators as such, because you can't rely too much on indicators, but have you looked at your analysis, your trend line? Is it just a small spike? 5 minutes later, it comes back down, and then I got rewarded. It hit my take profit, and I was out. So I think I'm used to that. And for new traders, you put in 10,000, you're risking 1,000 to maybe gain 2,000. Is already minus 600 into your stop loss, and you're like, do you know what? Let me cut now instead of losing the whole 1,000. If you lose, you lose. But the next trade, you apply the same strategy, and you get your 2-to-1. So basically, you're back in profit. So sometimes you just have to take the L's, as they say. But at the same time, if you cut yourself short and it comes back in your favor, you're going to be more angry. So just do your risk analysis very well when you take the trade. Don't put your stop loss at a point of where you feel the market will come and take you out. But if you put it 7 or 8 pips higher, it will flip back down, because the market can do that. It's not
Yes, yes.
the market's not your friend. It's not going to sit there and say, all right, I'll let you off this time, and then next time, if you don't move your stop loss up, I'm going to take back that money that I should have taken. Just put it in a good area, but just make sure it's in your risk to reward, the stop loss. There's many calculators out there, many formulas of how to work out your stop loss when you're placing the trade, and obviously you'll take profit to get the reward. So I believe it can be done. It can be done. It just takes a bit of time, but the
Yes.
quicker you get into that
Takes
method,
time.
the quicker you get into that method, the quicker you look at a trade. And when you put in a stop loss, you're not thinking that, oh, it's going to eat my stop loss. You're thinking more of the loss than the profit. So that's when people either pull their stop loss too short, get taken out even after 5 minutes, and then it comes in your favor, and you're like, but you keep on doing the same mistake 3 or 4 times. By then, it's eating up so much into your money that you put in, that you get deteriorated. So sometimes maybe put a wide stop loss and see how far it came before it turned in your favor. As long as it's always turning in your favor, you're doing something right. But with taking your stop loss, you need to go reevaluate your strategy. So that's my
Yes.
take.
Thank you for sharing that. Thank you for sharing that, Chicks. Like he said it all. It's just you doing the right thing, right risk management plan, and understanding how the market works. Okay, like you said, it's not your friend, and it won't give you a second chance. Okay, you've got your stop loss. Yeah, I won't go there today. I will go there
Yeah,
tomorrow. Just let it won't at all. It won't, and it will just do what it wants to do. So the key thing is, once your emotion is in check, you don't get mad or angry at these little spikes that happen, this little reaction. Remember, it's just a reaction, it's short term. Okay, it's short term, and your goal and everything about the market is long term. So you don't have to feel down or discouraged because of the market is doing something you don't want it to do at all. It's what it is. It's what it is. If the market will take out a stop loss, it will. If it won't, it won't. Just understand that, and
mm,
you'd actually excel and scale higher in the financial market. And like I said, you don't want to be a professional trader. Okay, you want to be a profitable trader. Some professionals are never profitable. They just know the figures, they just know the values, they sound
yeah,
all knowing, but let them show you results. They have got nothing to show for it. Just the values, the projections, and all. That's what they show for it. They can't show you results. Okay, so you need to understand there's a difference between an analyst and a trader. An analyst will tell you this is where price go. Price will go there, but no results to show for it. Just the results, the price
mm,
went there. No profit potential, no figures, no monetary value added to it. But a trader will tell you this is where it's going to do, and he's going to take actions, like putting his money where his mouth is. And that's the logic. Okay.
and an
So thank you
analyst
so
is
much
like
for sharing.
it's like a weather reporter. That's what an analysis is like. They'll tell you the weather tomorrow, but whether they're going to jump in the rain is another story.
It's true, very true, like a weather forecaster. Thank you very much for your time, Chooks.
That's fine. That's fine.
Okay, so let's analyze your financial instruments, then we call it a day on today's webinar. Okay, so anyone has got something, a financial instrument they want us to check, please do drop them in the chat box. I'll pick only one for time's sake. I pick just one, and we'd proceed from there to ending the webinar. Okay, keep on dropping. I'll just pick one as the spirit leads. Okay, gold USD card. I'll do USD card because that's coming from Chooks. Okay, I'll do USD card, and I'll be sharing my screen right now. So like everybody knows, I do a top-down analysis. Even if I'll be trading short term, I still do a top-down analysis because that's me. Top-down analysis. Okay, so this is GU on my screen. I call GU sell from this area right here. I took the trade also. I have results to show for it. Okay, so USD card. Okay, so let's just put all of this in place. So from the weekly time frame, that's where I want to check. Now, if you remember vividly, I called USD card buys, like higher price on USD card. You can check our Telegram, sorry, our Instagram page. I called this buy, like this was FOMC right here. I called it during FOMC, a day before FOMC or so, or a few days before FOMC. I called it, and actually I was in that trade. Let's go to the 15 minutes, I guess. I took the trade on a 15 minutes time frame. Like I had to go down to like the 5 minutes to get an entry. Crazy stuff. I was risking like 5 pips and had 163 pips on that. But yeah, I can clear my chart right now. You can check it on the. I think I dropped on Telegram channel too. You can check it on Telegram channel or go and check our Instagram page. It's there. So first off, what is USD card doing? That's the question. So Eagle Global Markets, that's the Instagram page. What's USD card doing? First thing first, what's USD card doing? So generally, USD card is in a downtrend, okay? The reason I called buy moves was because I knew USD would get stronger during FOMC. That was why. Basically, that was why, okay? But now we are still in a downtrend. No positive stuff about USD for now. No positive stuff. So USD still bearish. The Feds and they played a trick on us during during NFP last week, and it was a clean trick. Everybody saw the trick. Only if you don't understand fundamentals, you might have missed the trick they played on us last week. But yeah, taking my Fibonacci from the swing high to the swing low, we can see that price is in the downtrend. Let's first confirm the downtrend. We had a high and we had a low. So we had an expansion and a correction. Expansion, correction, expansion, a bit of correction here, expansion and a correction. So what I might be doing in this instance is looking for selling opportunities. So I'll be looking for selling opportunities down into these two area right here. Okay, so I'll be looking for selling opportunities down into this two area because dollar is still weak. Okay, dollar is still weak, and let's just mark out those two areas. I'll look for selling opportunities on this on USD card. Okay, so first thing first is my POI, my point of interest on the weekly time frame would be this bullish candle right there. Okay, that bullish candle right there is my POI. We are looking for selling opportunities, so it means price might want to trade lower or trade higher into this area before coming big down on the charts. Okay, so just when I'm saying this, I'm bearish on USD card. This will be my take profit areas long term. Then I go down to the daily time frame. So on the daily time frame, what I want to see is price reacting. Okay, I want to see price reaction on the daily time frame. So what do I want to really see? Look at how price moved here. Okay, we can see when price moved lower, we had liquidity void. at these areas, and this big POI can be reduced to this area right here, trying to make it perfect. Okay, those big POI, that big POI from the weekly time frame can be reduced to this area, and let's reduce this. So we can see we already played into the area. Okay, we played into the area. I remember we have a long-term target of 1.684 and 1.604. So we already tested this area because we used it to fill this CB right here. Okay, this sell side imbalance, buy side inefficiency right here. We filled it right there. So that's a +1 for us. Okay, we filled it using the buy move, and which is actually signifying to us that we might be going to the downside very, very soon. Okay, so what we had was we had impulse correction, impulse correction, impulse correction. But if we go down to the 4 hour time frame, this was like a break in market structure. Okay, that was a break in market structure, and CB field, no arguments on that. We've been able to fill that CB, which is inefficiency in price or fair value gap or imbalance, whatever it is, whatever you know it as. Okay, we filled it, and I'm trying to make that perfect. Yeah, brilliant. We filled it, we tested into that POI. We might be looking at lower prices. Okay, so I go down to the 4 hour time frame, and remember, my long term target is still down below here. Okay, long term targets are still down below here, but I might not be taking profits there. Just an idea that price has to trade lower. We've got clean lows down below at 1.20078. So that will be my target, initial target, if I'll be selling the if I'll be selling USD card. Okay. Now on the 4 hour time frame, what we have is, let's make this full screen, and okay, great. Let's make it, oh sorry. Okay. Yeah. Now, looking at this piece of price action here, okay, this uptrend, let's deal with this uptrend first. This uptrend right here. Okay, now looking at this uptrend, we had a high and a low, a higher high, a higher low, a higher high, or basically expansion, correction, expansion, correction, expansion and correction, expansion and correction. Then we had expansion, small correction, expansion, small correction. Then an expansion, which we went major downside. Okay, we went major downside. Now, what I really want to see is a piece of inefficient price action here. We need to feel that. Okay, we need to come down to feel it, and we've got a trend line right here, which is like a phantom trend line. Let's just pick up those 2 points. I could pick it like this, I'm still correct, and I could pick it like this, I'm still correct, but I prefer this actually. Okay, so this is retail stuff by the buying here. Well, with that known, where did market structure break? Okay, market structure broke right here, this old area right here. Okay, market structure break right there, and we had a mitigation, went down, but we didn't go down lower. And also there was also a break in market structure right here using a wick. But which one do I want to consider? I consider this one because candles closed below it. These candles did not close below it. Okay, so this is like where I'm considering my break in market structure. And you can see price retraced higher. Why did price retrace higher? There was inefficient price action here. We had to feel it. We had to feel this. That was why we went higher. And right there, we would have gotten a first entry right there. But that's just inside stuff. But we've seen where we could have gotten our first entry. We know there's inefficient piece of price action here. We have to come and get a second entry. So what would my second entry be? To be yeah, okay, this candle right there. So I'll be looking for a buy to sell opportunity on what's it called, on USD card. Okay, it has to go higher first. So it has to go higher first before coming down. Okay. That's to go higher into this area before coming down. And how much will I be risking? How much will I be risking? Let's see if price goes into this area. I'll be risking 30 pips. Okay, let's make that 30 pips. That's 30 points. I'll be risking 30 points to catch. So this will be my first take profit, yeah, to catch 170 points. That's like the first because I'll be getting multiple entries at that area. That's like the first one. Then the second one, I want to like give price more breathing space. So I'm looking to put my stop loss at 64 pips, okay, or 64 points, and I'll be targeting this low right here. That's 414 pips. Okay, so this is like first trade will give me 170 profit, 170 pips profit, which is like 5% gain of my trading account, and the second one will give me 6% gain of my account. Well, if price does hit this area and goes lower, I'll just reduce my stop loss to 30 points also. So I'll be making 15% of my trading account on that single trade. So like that is my bias on what's it called? That's my bias on USD card. So if you have the same bias on USD card, just say yes. If you don't, just say no. Okay, I might be wrong also. Like I say, I'm not. Nobody's perfect in the market. The market does two things: it either rewards you or humbles you. So you can't be 100% perfect in the market. But if you've got the same bias with me or another bias, I'd be glad to hear your bias also in the chat box. Okay, so going through the chat box, I believe we all understand how. Okay, you've got a different bias. What? Oh, Chicks, what's your bias on USD card? Because I choose the pair because we spoke about it. If you got a different bias on USD card, just state it in the chat box. And if you've not got a different bias, okay, you're on the sell bias. Brilliant. So we are both on the right track. We're both on the right track. Brilliant. Yes. Wow, no audio for some time now. Yes, the next lower high should form at that area right there. So let me, those that said they couldn't get or they didn't understand how I got the entry. So what I did was basically I went to the weekly time frame. I understood the direction of price. Okay. I said we are in a downtrend just from this expansion, correction, expansion, correction, expansion and corrections everywhere. Yeah? Then expansion and a correction. So this is lower highs were formed, okay, and this is a lower high right here, and we said we are using this big POI, this indecision bullish candle right here as our POI, okay, and we threw a fib on that. We saw it was at the minus, the 78.6 fib level, and this was the extension level, the 1.61843 and the 1.6040 level. That's why I said the major sell take profit is, but I'm not willing to hold my trades for that long. I don't have that kind of patience. So I went to the daily time frame and I went to streamline it on the daily time. So that big POI that we saw on the weekly time frame, which was this, okay, all of this right here, which was all of this right here, all of that consolidation in price. We've been able to streamline it by saying that there was inefficient price action and it was fueled. So price has no business coming to the upside again. Okay, it has no business because look at this. This is a high, but this high was higher than this high. So that was a stop hunt. Okay, stop hunt of people that sold early. So we stopped them out and we went to the downside. So this means price has no business of coming higher again. And I said we have clean lows, okay, clean lows right here. Price has to come to grab those clean lows, and we have inefficient piece of price action here also. So we need to feel that. Then we went to the 4-hour time frame, which was where I did most of the work. I said we should focus on this piece of price action first, this uptrend, and I said we had expansion, correction, expansion, correction, expansion, correction, expansion, correction. Expansion, small correction, expansion, small correction, major expansion. Then we broke market structure here. I said this was the major break in market structure because of candlesticks closed below that area. But why did we now go higher? If that was a major break in market structure, remember there is inefficient piece of price action here. So we came back to fill it and grab liquidity sitting high here. Then we went lower on Friday. And now we expect price to still go higher because of this inefficient piece of price action and go lower after going higher. So I said it's a buy to sell model. Okay. And I said I'll be getting two entries. One I'll be risking 30 pips and one I'll be risking around 70 pips. That was how I arrived at a sell bias on USD card, and I'll screenshot and send to the Telegram group right now so everybody can monitor it and place the trade if they like. Remember, it's not the financial advice. I'm not a financial advisor. Do not take the trade if you don't know the risk involved in it. So I've sent it to the Telegram group. And yes, this brings us to the end of today's webinar. Thank you for joining me. I am still your host, Akinwale Chibike, and good luck and good trading.